We're going to talk about certified distress property expert. That is what I am right now. And here's a little quote from Thomas Edison. If we all did the things we are capable of doing, we would literally astound ourselves. Here's some numbers, statistics on the third quarter of last year for total home loans done: 4.39 in foreclosure, 9.39 in default, which is 30 days late or more, which is a total of 13.78 distressed properties. These are all stats from the Mortgage Bankers Association based on 44 million mortgages. The next we have only FHA loans. Same thing, third quarter, 3.22 in foreclosure and 13.22 in default. These are VA loans, 2.14 in foreclosure and 7.82 in default. VA loans is a loan, you got to be in the military to get a VA loan. It's a 100% loan. A lot of people use that for them when they're in the military. Great product. This is foreclosures explained. Foreclosure is a process. If you default, which you must miss a payment, default on a payment is only a way a property can enter into the foreclosure process. It can also be a missed payment to a local taxing authority, condo association, a homeowner association. If you miss paying your homeowners association, they can actually start the foreclosure process. Got to get a legal notice. The lender or foreclosing party must notify the owner that they are entering into a foreclosure process. Personal service of a document, or if the owner cannot be located through publication in a legal journal. Here in Kentucky, we have lispidens, which you will get a certified letter, and it is a process, a court process. The next, possible consequences of going into foreclosure and reasons to avoid foreclosure. Obviously, nobody wants to go into foreclosure, but today with the financial hardships, there's just things that happen to everyday people. You will always have to disclose on any mortgage application and many job applications. Foreclosure is the only credit item that will affect your rates even when it is off your report. So you'll always be affected by the foreclosure throughout your whole life. Credit scores can be lowered by 300 plus points. Most devastating credit issue you can have in relation to future credit availability. And you will be ineligible for a government assured loan for 5 to 7 years, only 2 years in a short sale. And in some cases, I've seen a year you can establish a new home if you do a short sale. Reasons to avoid foreclosure. Obviously, nobody wants to go into foreclosure, but you may end up with a deficiency judgment, which means that whatever the house is sold for, you'll be responsible for the difference. Many employers run credit checks. Many current employers running credit checks, and a foreclosure can put a current position in jeopardy. If you work for the military, you have a government position, you could lose your security clearance as far as with foreclosure, which could cost you your job. Reasons to avoid foreclosure. As your agent, your CDPE agent, I will explore every option with you and work towards a resolution. While it may not seem like it now, there will become a time when you look back on this situation, you will want to know you did everything you could. The solutions is you have options like reinstatement. If reason for distress was temporary and has been resolved now, as far as employment, laid off, can be done up to the day of the bank sale. So you can do a reinstatement all the way actually up until they sell your home on the courthouse steps, as they do in Kentucky. It must be able to pay all payments and late fees due on your mortgage will remain the same. Then, for an example, the reinstatement example, a homeowner misses 4 payments on a $1,500 a month loan, and the foreclosure process has been initiated. The the reinstatement amount would be 4-month payments at $1,500 a month, which would be $6,000 total. You got late fees of $300. You got legal fees of $1,200. You got processing fees of $250. What your total reinstatement payment would be $7,750. And of course, that's an example of legal fees and everything. But your options, you have a forbearance or repayment plan. And what that is, if for a reason for distress was temporary and resolved, like I said before, if you got laid off and now you've got hired back, but it requires lender approval. You may be allowed to make your back payments over time. Normally does not fully reinstate mortgage until plan is completed. In an example in a forbearance is, say, again, $1,500 a month. You're 4 months behind, which would be $6,000. Again, the late fees, legal fees, processing fees. Your total reinstatement is $7,750. Of course, the bank allows you payments to be broken up over 12 months with a monthly payment of $646 of the $7,750. Then your current payment which was $1,500. So now your payment totally for 12 months now is $2,146. You add your regular payment in, then you add your late payment in there as far as your 4 missed payments, all that stuff, which would be $646. One big thing on the forbearance plan, there is a catch, of course. Typically, it's not fully reinstated until all payments are paid in full. If you were to miss just one payment, you can be at the same action as far as foreclosure process as you were missing 4 or 5 payments. So it's tricky. Your option, of course, you can sell the property. If you have equity in that, you can sell and cure the foreclosure. You may have more time than you think to sell the property after receiving foreclosure notice. Then obviously you could rent the property. A lot of the cases right now with the renting the property, you can't rent the property for what the mortgage, what you owe on it, and you got to cover, the taxes, the insurance, and all the repairs. So a lot of time that's just a hassle, and that's not an option. Again, you can refinance, but again, your credit's probably shot by now. Equity's lost, and typically it's just not an option either. But the mortgage modification, one thing I want to stress right here is if you have to pay to get a loan modification, it's fraudulent usually, because that is something that is free service. You need to call your bank up and see if that is something that they will work with you on. It requires lender cooperation. They can modify the interest rate and the payments, but you have to qualify just like you were when you was qualifying for the loan. And another resource is makinghomeaffordable.gov is the government loan modification program. Then, of course, you have to verify all means of income when you do a modification, and you should be certain that you can afford the modified mortgage payment. You can pursue a mortgage modification and prepare for a short sale simultaneously. So if you think you can do it, start the process of loan mod. Then, of course, if you cannot do it, go through with a short sale. Deed in lieu foreclosure, they call it the friendly foreclosure. It's just like a regular foreclosure. Basically, you sign the deed over to the bank rather than going through with the foreclosure process. But again, it's still reported as a foreclosure. It could devastate your credit from here on out. It typically only works with one mortgage, so you can't have like a second mortgage, a line of credit or anything on it. Bankruptcy will stall a foreclosure, and if payments are lowered to where payment can be afforded, may save property.